America is in a nuclear standoff, and not the kind you're thinking. Right now, the United States relies on foreign countries, including Russia, to fuel the next generation of nuclear reactors. But one company is quietly working behind the scenes to change everything. That company is Centrus Energy, and if they're successful, they could become the single most important nuclear stock in the country. Hey everyone, Robert here. Welcome back to The Alternative Investor, where we break down the market's most overlooked opportunities and hidden gems. Today, we're doing a deep dive on Centrus Energy, ticker symbol LEU, a nuclear fuel company that could play a pivotal role in reshaping America's energy independence. This isn't just another small-cap stock. Centrus is the only United States company licensed and currently producing HALEU, high-assay, low-enriched uranium, the fuel critical for next-gen nuclear reactors. With the global energy landscape in turmoil and America scrambling for secure fuel sources, Centrus isn't just relevant, it's essential. Let's break it down: what they do, why they matter, what the risks are, and how investors might want to think about exposure to this high-stakes nuclear renaissance. The narrative around nuclear energy is shifting fast. For years, public sentiment was hesitant, haunted by names like Chernobyl and Fukushima. But today, with countries racing to decarbonize while still keeping the lights on, nuclear has made a comeback. Not only is it carbon-free, but it provides consistent base-load energy when renewables fall short. Here's the problem. Most of the next-generation small modular reactors, or SMRs, and advanced designs don't run on traditional uranium fuel. They need HALEU, which is enriched to between 5% and 20% higher than the typical low-enriched uranium used in large reactors. Right now, there's only one commercial HALEU supplier in the entire Western world, and it's Centrus. Historically, the US has imported uranium enrichment services from Russia, but as tensions escalate and sanctions mount, that supply chain is becoming politically and economically unsustainable. The Department of Energy and national security officials have sounded the alarm, and this is where Centrus steps in. Centrus isn't just any nuclear stock, it's the only US commercial entity with the NRC license, the DOE contract, and the infrastructure to produce HALEU. That's an unbelievably rare position in the energy space. Their American centrifuge plant in Piketon, Ohio, has already completed its first cascade of centrifuges, and is now producing HALEU under a demonstration contract with the US Department of Energy. This is the first US commercial entity to achieve this milestone. The geopolitical importance of this cannot be overstated. Imagine the United States attempting to build out next-gen nuclear infrastructure while still relying on foreign, often adversarial nations to fuel it. Centrus has the opportunity to become a permanent strategic fixture in the US. And here's what makes it even more intriguing. They're not just enriching uranium. They're developing the tech platform that could power a HALEU supply chain ecosystem, meaning more contracts, more licensing opportunities, and potentially global reach. Let's take a look at the numbers. In fiscal year 2024, Centrus reported $442 million in revenue, a 38% year-over-year increase. Most of this came from its low-enriched uranium segment, but a growing portion is tied to government HALEU contracts. They turned a profit of $52.9 million with operating income of $70.8 million. That's solid, especially for a company in a highly regulated and capital-intensive industry. On the balance sheet, Centrus reported roughly $165 million in cash and equivalents with manageable long-term debt. However, the company does face cost volatility due to uranium price swings, foreign competition, and delays in government funding disbursement. Another key point: their production capacity is still small. The current Piketon cascade can only produce about 900 kilograms of HALEU per year, but future capacity could scale to 20 metric tons annually if additional government funding is secured. That scaling will take time, and cash. Investors should be aware that dilution or debt raises could come into play if federal grants don't cover expansion fully. The US government is backing Centrus not just in words but in dollars. The Inflation Reduction Act, Bipartisan Infrastructure Law, and the fiscal year 2024 Energy Appropriations Bill all include funding to help build out HALEU supply chains. The Department of Energy has committed up to $2.7 billion to create a domestic enriched uranium supply to serve commercial and defense needs. Centrus already has a contract with the DOE for HALEU demonstration, and is well positioned for follow-on awards as the DOE prepares to purchase HALEU for commercial reactor projects. More importantly, the US military is actively researching micro-reactors and small-scale HALEU-powered energy grids for remote bases, and Centrus could be their only viable supplier. In an era of escalating international competition, this isn't just energy policy, it's national defense. That's the kind of long-term tailwind you don't get often. Centrus Energy trades under the ticker LEU, and as of now it's still considered a small-cap, high-beta stock, meaning it moves fast and reacts strongly to news. This makes it risky but potentially very rewarding. If you're long-term bullish, you might consider accumulating shares on pullbacks. But if you want to generate income while waiting or reduce your cost basis, you can use cash-secured puts at out-of-the-money strike prices. Say the stock is trading at $45. You could sell a $40 put and collect premium while setting yourself up to buy at a discount if the price dips. On the other hand, if you already own shares, covered calls at $60 or higher can help generate income without capping your upside too aggressively. Because this stock is tied so closely to federal policy and government contracts, Options allow you to profit from both volatility and long lead times between milestones. In 2025, the market will be watching for several key things. Will Centrus receive more DOE funding to scale its Piketon plant? Will commercial reactor developers like X Energy and TerraPower announce fuel purchase agreements? And will the NRC approve broader HALEU production and distribution licenses? Any of these catalysts could send the stock higher, but failure to secure more government backing, or delays in ramping production, could lead to increased volatility or capital raises. Centrus doesn't need to dominate the uranium market, it just needs to remain the go-to HALEU provider in a world where nuclear demand is rising and domestic control is becoming non-negotiable. So is Centrus Energy the most important nuclear stock in America? It just might be. It's uniquely positioned at the intersection of national security, energy independence, and advanced reactor technology. And while it's still a small-cap stock, the stakes it's playing for are massive. That makes it one of the most asymmetric bets in the entire energy space right now. But remember, high potential means high risk. Do your due diligence, manage your position size, and keep a close eye on federal policy shifts. I'm Robert, and this has been The Alternative Investor. Make sure to subscribe for more deep dives like this, and let me know in the comments what you think. Is LEU a long-term hold, or just riding the nuclear hype?